When money is moved from one place to another in sectors, it's called sector rotation. So this is when money is moved from a sector that's out of favor into a sector that becomes in favor due to what business cycle that we're in. Business cycle lasts anywhere from 7 to 10 years, and it has to do with the expansion and the contraction of the stock market and the overall economy. The 12 big sectors I follow are gold, oil, bonds, dividend stocks, growth stocks, crypto, penny stocks, technology, defense, healthcare, real estate, and consumer staples. Now, in order for you to have a well-diversified portfolio and to realize when the sectors are rotating, you have to watch each of these every single day. They aren't going to move an enormous amount individually every single day, but you may start to notice when money is being moved from one sector to another. So you could look at something like a dividend stock, start to gain some momentum while you have your growth stocks in a downtrend, which is kind of the cycle that we're in right now. You have all of your well-paying, well-known dividend stocks going up and going higher along with bonds and crypto, while you have your growth stocks and your biotech stocks and your penny stocks going down because they just aren't cemented in that business cycle right now. So what we have here is the expansion and the contraction of the sectors. So don't really get your mind twisted with all those different sectors on what side of the expansion or contraction we are in. You just have to know basically by looking at the charts which ones are in favor and out of favor. So what I'm going to do is I'm going to go through each one of these big 12 sectors, and I'm going to break down kind of my favorite stocks to invest in that sector. I'm going to break down the chart and see kind of if we're on an uptrend or downtrend, what I expect in the future, not what I know in the future, because I don't know what's going to happen. You know, we have dividend stocks reaching all-time high, technology stocks breaking out at all-time highs. I don't know what the future holds. Just because a stock is at an all-time high doesn't mean it can go higher. And just because a stock is at an all-time low doesn't mean it can go lower. So it can go much higher and much lower than you ever imagined. And make sure that you guys have diversified portfolios. You can't just be all in on one sector, because when that sector goes out of favor and gets smashed, you could have had money in another sector that was going up. So this is a diversification video and a video breaking down all the different sectors. So I'll start off with gold. Investing into gold is kind of the older, safer way of investing. It is a traditional way to hedge against cash inflation. In the stock market, you can invest in GLD, UGL, and AUY. So what I like to follow is the UGL because it's 2 times leverage. This is a chart of the GLD. So right now with gold, we have price under the 200-day moving average, which I like for upside. It is considered in a downtrend right now, short term. But long term, I do see this thing going higher. It has room to grow. It is not at an all-time high, so you could consider this a discount if you're long-term investing. Since I'm building a diversified portfolio, I want to make sure that I have one of these 3 stocks in my portfolio, at least 5 to 10%, so I'm well diversified. All right, so now let's talk about bonds. So with bonds, they're pretty boring to talk about. They're not really interesting, and it's not talked about a lot on the internet. But they are a necessary part of diversification. Normally, when stocks are going down, you have bonds going up. And when stocks are going up, you have bonds going down. So it's important to use this as both a hedging tool and a diversification asset. So I like using the TLT and the TMF for 3 times leveraged. This is a chart of the TMF right here. So what you can see is when it was way underneath that 200-day moving average, I started accumulating shares. I put about 15 grand into the TMF, and I just rode it all the way to the top. Now I'm sitting at about 2,000 to 3,000 in it, just because I mean, maybe it goes higher, but it is at that 200-day moving average right now, and it's just been going sideways, giving me time to get out. So I would recommend, either in the TLT or the TMF, just being in one of those sectors so that you have some bond exposure. All right, next we'll talk about a prime example of sector rotation. That's with the oil stocks. So if you remember back when COVID happened, oil went to zero. It was just completely out of favor. People were overreacting and freaking out. And this is why you need to be diversified, because you can pounce on these different opportunities. So with oil, it went to zero and it came right back up and it went on a massive run. So with oil stocks, I mean, you could just go into Exxon or Chevron or, those, just the gas companies. Those are fine for oil because they're going to move with the sectors. You could also invest in the ETF Gush. And if you look at the chart here, we've been kind of in like some sideways action. It's been going up and down, but it hasn't moved too much because since COVID, we've seen such a massive run. And It's just risky to completely get out of a certain sector, and to somehow say that oil is going away completely is just kind of ridiculous. And the same thing can be said about any of the other sectors I'm talking about. To just say that the sector is gone, it's going down to zero, and it's staying at zero is ridiculous. So whenever you see it go below the 200-day moving average, or if you see these sectors just completely get smashed, that's when you need to start thinking like a sniper. Start accumulating the shares, because it's going to go higher. Anybody else telling you otherwise are just stupid people. You need to get them out of your life, because they're the ones that are going to rob you of that opportunity. Okay, so I'm going to keep this next one short. I'm going to talk about the dividend aristocrats, and this is just dividend stocks in general. So this is the ETF, the S&P 500, AUDP. It's just gone way up. It's not a good opportunity right now. I do expect a significant pullback in dividend stocks. I do not know when, but I do know that eventually there will be a pullback, because last year during COVID, dividend stocks weren't going anywhere. They're just moving down or going sideways. And, people would say, oh, why would you buy boring dividend stocks when growth stocks are going straight up? Well, because now let's talk about growth stocks. The sectors will always rotate. There is new money being put into dividend stocks, and that has gone straight up, and it's at all-time highs now. Well, growth stocks here have been getting completely smashed. The driving force behind this is interest rate fears. So the big time money, the investors, they're thinking that interest rates are at all-time lows, that they're going to go up in the near future. This is problematic for growth stock companies, because in order for them to keep growing, because they're still newer companies that need to maintain growth, in order to exponentially grow, they need to borrow more money, that they're going to be paying more money in interest, and therefore it's going to slow these growth stock companies down. Now, some of the future growth stock companies I like to invest in right now that have the best opportunities is the ARK Innovation, Uber, Zillow, and Roku. There are hundreds of other growth stocks that you can invest into, but these are just my favorite that present the most upside. So ARK is in a great stage one accumulation. Uber has been getting smashed. I love the deal here. I think it's a double. Same thing with Zillow. It's a great deal right now. You can just see that the common theme with these are that they've all gone down significantly. And it's not that these are bad companies. These are all really, really good companies in America. The problem is the interest rate fears are making the big money get out. And the biggest thing about sector rotation is that you don't want to be chasing the sectors. You want to get ahead of it. So get ahead of the sector rotation. So when something's out of favor, you want to get into it, because once it becomes in favor, you run it up. So growth stocks are about 75% of my portfolio right now. I'm just going to wait for that sector to rotate, and we'll be going up. I don't care if it goes down right now. Next, let's talk about penny stocks. And real quick, penny stocks are in growth stocks and dividend. They all flow in the same type of sector. Sometimes penny stocks are going up, but most of the time they are going down. So if you're going to invest in penny stocks, they have the most upside. Just make sure that you keep it small. So my rule is no more than 2% of my portfolio will be allocated to any one penny stock at a time. Some of the best penny stocks that you can invest to are junior biotechs, or just biotechs in general. These are a list of some of my favorite ones, including APRE, CBA, and MBRX. The ETF is LABU. This is a sector that's just been going really down. Besides growth stocks, I would say that this is the next best sector that you can get into. It's just something, again, if you're looking for a high risk, high reward, this is a great sector to get into right now. And the sectors will eventually rotate. These stocks will be in favor in the next 2 to 3 years. So, and you don't know when it's going to happen, right? So you just have to get a good deal when you can get a good deal. One of my favorite sectors to invest in is the defense sector. And one of the reasons for that is because a lot of their money comes from government contracts in which they have to follow strict guidelines, and they have really good people in place that can make sure that these things happen. So this is a list of some of my favorite defense company contracting stocks. Any of these are good. Right now, I wouldn't say that it's a great time to buy. It looks like it's starting a downtrend. They had a great run, just like the rest of the dividend stocks and the real estate stocks after COVID. I would say that it's something that you would need to look at right now. DFEN is the ETF that follows it. So I would definitely buy some, but I wouldn't go all in right now because it's not the best deal. Another sector you want to look at is the healthcare sector. So this isn't, my favorite sector, but it is something you need to have to be diversified in. My favorite stock in it is TDOC, and Cure is the ETF tracking it. And if you look at Cure, it's gone straight up. So obviously because of demands for COVID, it's in high demand. This isn't a good deal. I wouldn't buy any right now. With banks, it's another sector that has a lot of interest rate ties to it. So with interest rates going up, you can expect that the bank stocks, these lists right here are some of my favorite, by the way, to go up in the near future. So it did have a decent run and it pulled back, and now we're sitting around the 200-day moving average. So it's not a deal, but I would say it's something that you should consider investing for a diversified portfolio. Next is the newest sector, crypto. And crypto is very simple. It's just completely driven by Bitcoin. So wherever Bitcoin is, you can expect all of the other crap coins and even some of the bigger coins like Ethereum and Cardano to follow. So here's a chart of Bitcoin. Bitcoin and all of crypto can just get smashed and go up. It rotates on its own accord. It goes down 50%, up 100, down 50, up 100. So these are the main 6 coins that I would invest into, that I would keep diversified. But Bitcoin definitely has to be the biggest percentage of crypto that you own, because Bitcoin does have the upside of going north of 500,000 in the next 10 to 15 years. One more sector that I'll end it off with is the real estate sector. Everybody knows that it's gone up and hit all-time highs in the last year. These are some of my favorite REITs to invest into. Also, DRN is the ETF tracking real estate. So if you can't afford real estate, I do recommend that you have some sort of your portfolio invested in one of these stocks, because it's a way to get a good dividend. And maybe it's not a deal right now, but as I said earlier in the video, just because something's at an all-time high doesn't mean that it can't go higher. And just because something is an all-time low doesn't mean it can't go lower. So this isn't me trying to predict what's about to happen in the next year, 2 years, 3 years. This is just where the market's at right now, how the sectors have rotated in the past year or so, and what I can expect to happen in the future. So I hope you guys have a good idea of sector rotation. The biggest key is just to understand what the sectors are and to watch them every single day. So I'll end it off with that. Thank you guys for watching. Have a good day.